Good afternoon. So I thought I would start with a quote which I saw earlier this year. And there's this gentleman called Raul Paul. He is a macro trader somewhere in the US, and he suddenly heard about this thing called the India stack. And it was the first time he saw it, and he looked at it, he was very surprised. He then called it something which was, very flattering for people like me who work in the space. He said that this is like what the railroad was to the UK or the interstate highway system was to the US, which is really fundamental infrastructure on which a lot of growth is going to take place. And he believed that this is going to really revolutionize the way India is going to be in the next 10, 15 years. And hence he felt India was a great macro bet to place. Now, we spoke to somebody and they said, oh, it's a small guy, only a few $100 billion is going to flow. And we're going to actually see more people come in later who are going to bring in more money. Now, what is it that this is causing, right? So this is what we want to quickly start my conversation with, is around the India stack. Now, India stack is a set of technology platforms that allow people to build applications where you don't need to be in present of somebody to do a transaction. That's the presence-less. You don't need paper to do a transaction. Again, that's the paperless part. And of course, it's cashless. And then to top it all, because there's a lot of this happening digitally, there's going to be data which is going to be exchanged. And then there's a consent layer. And this is really about how we manage the data in a way which is very privacy sensitive. And then there's, of course, applications on top of it. Now, what is the scenario? Indians are moving rapidly along the path of digitization. We have about 300 million new bank accounts through the Jan Dhan scheme, which brings the total number of bank accounts in India to close to 1.5 billion, because many people actually have multiple accounts. The number of people who are banked is still around 500 to 600 million. But the good news is pretty much every household has access to banking. Aadhaar is 1.16 or 1.17 billion now. And the number of mobile phones is actually fairly large, but about 350 to 400 million smartphones out there. And but digitization is going so fast, it's like every second there's 3 more Indians who are experiencing the internet for the first time. And that's really, very rapid growth that we're seeing. And as a result, the number of digital transactions is going up, whether it is the number of digital signatures that are being done or the number of payment transactions and so on. This chart sort of tells part of the story. This is the number of Aadhaar authentications. 5 years ago, September 2012, this is around the time I was leaving the UID, by the way, we were doing around 3,500 transactions a day, just 3,500. Last month, we did an average of 34 million. That's a growth of 10,000 times in a period of 5 years. And we're not talking percent, it's just times. And that kind of growth that you're seeing, and people might assume that a lot of this happened recently if you see the chart. But if you actually take a look at the numbers and draw a smaller section of the chart, the shape is the same. It's a classic exponential curve. You draw it on a log scale on the number of transactions, it's a straight line. It's very steady growth. And that tells us that there's something fundamental happening. It is not one specific event or one specific thing that's at play. It is that adoption is growing slowly, and more adoption is leading to even more adoption. This is UPI. How many people here have used UPI in the last 3 months? Okay, still a small number. That tells me there's a lot of room to grow. And that's actually right. UPI was launched a year ago, almost exactly a year ago. 25th August is the first UPI app that was launched last year. And in 1 year, we've gone from pretty much no transactions to about 17 million transactions last month. That's 500,000 transactions a day starting from zero. And while for a new payment product, that's a lot, in India, we do about 10 million payment transactions a day. So that's still about 5% of the market. So you've gone from 0 to 5% of the market in 1 year. But if you take a look at the Aadhaar chart, it tells you that within a few years, we will be doing more than what cards and so on have done. what China has shown is that the number of digital transactions they do, which went up from about 50 transactions per capita to, I think they do more than 1,000 per capita right now. They've gone to about 3x their GDP in digital transactions. And that is something which we should expect to see here as well, because the RBI tracks payment transactions across the country. And currently we do around 200x of, and not just digital, this is checks and everything included, of GDP in transactions. And so clearly there's a lot of room to grow. And I do expect to see UPI go along that path, and within 2 to 3 years, we'll start to see comparable numbers. Now, how is this impacting? I mean, these are sort of very macro level numbers. And so if you want to sort of dive a little deeper, what we do is we look at India by demographics, by how we think of it as 3 Indias. One is at the bottom of the pyramid, what is we calling India 3. India 2 is aspirers who are sort of above the poverty line, but they're looking to build something and grow above that. And then there's India 1, which is really affluent. The level of affluent that's required is almost, you would be surprised, it's about 3.4 lakh rupees of annual income. And that number is less than 1% of the country. It's a really small number. So, what we want to think in terms of is how this is affecting the country. And India 3 is really depending on subsidies. Aadhaar was responsible for the support for DBT that actually allows money to go into people's bank accounts directly. That removes middlemen. And if that results in them getting, if the loss in subsidy transfer goes from 80% to 60%, they get double the money they were getting earlier. And that alone is sufficient for us to start to see over the next 10 years, our core numbers in terms of health, maternity, all death rates go across the country will improve. And these parameters will help us become a better country. If you take a look at the aspirers, this is really the one we want to worry about, because this is where, as an entrepreneur, if you're not focused on this business use case, you're going to lose out, because this is a segment which is growing rapidly, which is digitizing, which is looking for ways in which they can improve their own lives as well as their own income. And so if you have something to offer to this segment, you will actually be able to expand the market significantly, well beyond what the tier 1 is. And this is because what India Stack has done, what Aadhaar, UPI, and all of these things have done is they've made it cheaper for you to transact, for you to acquire customers, and that means the market size you can service goes up considerably. It makes the market much more viable. And we will see this happen with the India Stack, with financial inclusion use cases, and with healthcare, primary education, etc. All of these are very much business cycles we'll expect to see over the next 7 to 8 years. And then, of course, the affluent will also see improvement in different things. People will see the people reinventing the way you do processes, because trust is there, you can do more things. Your logistics will improve, your entertainment will improve. And so clearly, this whole set of stack is going to help along all these 3 dimensions. So much so that, within the next few years, we think this will sort of drive growth in many different ways. As soon as one set of growth starts to peter out, another will pick up and follow. And this really brings us back to where Rahul Paul started, is to say that this is so fundamentally disruptive that we will expect to see very big gains over the next 10 to 15 years. And hence, that's what it is. It allows combinatorial innovation. Now, some examples of this might be useful. There's a company called Now Floats, which worked with us at iSpirit. They did something called the Digital Desh Drive. This was around 3 years back. They started from Kanyakumari and drove all the way to Amritsar. And they stopped along small towns. They would stop at chai stalls, ask people to show them their phones. They would look at what they're doing. They'd have conversations. And then they repeated this again with a trip around MP, Bihar, and the one around Rajasthan. And these are stories from there. There's a police officer on the screen who uses Google Maps to go to a crime scene. He bought his last TV on OLX. There is a school teacher who knew he had no support, so when he wanted to buy a laptop, before that he spent the summer learning how to repair laptops so that he could actually go take a device to his school. And then after a few years, he switched to mobile phones, and he's the local go-to person for anything digital. We are starting to see many more people looking, and this is without people specifically targeting them. These are, Indians are a very innovative lot. Whether a company wants to service them or not, if they think it will help them, they will adopt it. So NowFloat's founder just gives a talk, which is, and you should go look it up on, he gave a talk at TEDx, called India Won't Wait. If you want to service them and make a business of it, you should do it. But if you don't, they won't wait and they'll go ahead anyway. And so this is something which I think you have to learn, is that there is a very large country out there. It's not urban. It is, looking to be served. And, it's a market that you have to go and get to. So, in banking, we are already seeing this. There's a concept of a selfie account. You download the app, you take a picture of yourself, you take a picture of documents, your account's open. Federal Bank launched this. To meet RBI compliance, they still had to see you in person, so you have to make one visit to the bank branch. Then DBS, Development Bank of Singapore, launched this. Sachin's been their spokesperson. There you just have to now go to a cafe coffee day. They'll give you a coffee and place a fingerprint sensor. You give your biometrics, and lo and behold, your KYC done. You can open a bank account. Paytm's using this to grow. And we expect to see this happen in self-service mode and assisted mode. Somebody can come home, a delivery boy, and open a bank account for you. And that's really, going to change the way your relationship with banks and financial institutions will happen. And this is an example where we did a pilot a year and a half ago. And generally, we don't see how we can give credit to the bottom of the pyramid, because the cost of sales is so high, just getting them on, processing it. Cost of servicing the segment is very high, and there's no credible data. And as a result, we have seen the MFI segment have the highest interest rates, and yet they have the lowest default rates. The default rate in that segment is under 0.5%, and yet they pay 24, 26, 27%. And the reason is really because of all of this. And we think this can change with technology. So, if our protagonist here, Rajni, who gets up in the morning, buys vegetables, typically on loan, does whatever work she does, sells the food, and end of the day repays the loan. She used to take money from an informal credit source in the range of 1 to 2% a day. And now if she were to say she needs a loan, she agrees to share data, she sees multiple loan offers, accepts an offer, does her business, and then sells goods, repays the loan. If she can do this without going anywhere, then on her smartphone, then I think we have done something. So for that, she needs an app, she needs the consent architecture to share data, she needs paperless contracts, she needs a bank account and where she can receive the money, do transactions, and then repay the loan. And all of this is enabled by the India Stack, the layer I started out talking with. And that's really something which we thought was viable. About a year and a half back, we did a pilot to prove that this could be done. And we actually were able to disburse loans in order of 5 minutes. And were completely paperless. And now, over the last year, this has sort of taken hold. There's actually a Digital Lending Association of India that was created, which is about 10 charter members and about 50 member companies who are only doing purely digital loans. Can you guess how many loans got disbursed in this manner in the last month? Amount, crore rupees. Less than, let me just ask a question, people can raise hands. Less than 10 crore rupees. No, one hand. Less than 50 crore rupees, more than 10, less than 50. So we are now starting to see more hands, about say, 12, 13. 50 to 100. Even more hands, great. How about 500 crores? Very few hands. Okay, the answer is in between. It's 200 crores. So, and that's really something, and it's growing. This is something which we are expecting to grow. Now, while we go there, I'm going to spend about 5 minutes that I have on data protection. So Supreme Court recently passed a judgment saying privacy is a fundamental right. We believe it has to go further than that data about us should be used to empower us in what we do and not just be used to sell to us or to make us targets of advertising. And the fact is that the more digital we are, the more footprints we're going to leave behind, because that's the nature of digital platforms. And what happens with these digital platforms is that when you have these footprints, they reside with the service provider, with the platform. And the platform then uses that data to make a better product, and that better product means you get more usage and more data. This sets up a virtuous cycle for that provider, and they start to improve their product in a way, and if the market is such it's a winner takes all, they are rapidly ahead of the rest. This is what explains the amount of money being burnt by an Ola or an Uber, because that's really what they're doing. They're improving their service rapidly to compete with each other, so that there are more rides happening, they learn more, they improve. And that is, in this cycle, what happens is the customer is sort of standing on the side. But it's actually not great for the customer. He shouldn't really, because eventually you end up with a monopoly situation, and chances are you can get hurt. And so, who do you trust? You can't trust the government, you can't trust companies. So really, the only person you should be able to trust is yourself with the data. This slide is, by the way, from 1995, and before, around the time the internet was sort of taking off. And we are sort of seeing the same thing today, and it's very relevant in this new world of data. So the key is to empower users through consent. And we think there's two types of consent that are important. One is the consent to collect data. And second, which we think is even more important, is consent to share data. The reason consent to collect is something people know. You get these things, you click and accept, and you're given consent for them to collect the data. But share is still a question mark, because what happens is that and let's take a taxi company. They have two customers. One is the rider, the other is the driver. So if you think of it from the driver's perspective, they would like to use the data that's gathered about them, which is the transaction history, payments, rides, the feedback rating from customers, to be able to get a loan so that they can own the car instead of renting the car, so that they can make progress in their life. And that, if they're able to take this data and take it to a bank and say, look, here's my history with this company, please give me a loan, then chances are they will get that loan. On the other hand, if they're able to take it to the next company and say, instead of one aggregator, they go to the other aggregator should be able to start them with a higher ranking than where they are. And so there are many reasons why they would want to own that data. You as a customer may also care about the data, but in this case, the other customer cares more about it. So we want to think in terms of different types of data. And data ranges from completely non-shareable, like biometrics, to public data. And there's personal data, KYC, that you share with banks, but there's also generated data, which you generate in transactions. And that data is the one we really believe should be shareable so that I can use it for my own benefit. And an example in KYC consent sharing is when you go to Aadhaar, when you're at Jio trying to get a SIM, you put your fingerprints, you're actually giving consent to the UIDAI to share your KYC details with Jio. And that is the basis of actually sharing the data. And we believe this principle can be expanded to all kinds of data to be shared. And this is the proposal we have put forward to make this happen. And I think over the next few years, you're going to see it happen. And this technology architecture, I encourage all of the entrepreneurs who are going to look at data to actually look through this and understand how they can be better off in this new world of privacy, how as a business they can build the right product. And this is really what it is. It inverts the data, empowers the customer, and that's really the world we want to live in. So really, 1 billion people are going digital. Expectations are high, they're getting higher. And as entrepreneurs, are you really ready to take this journey? Great, thanks.
Thank you very much, Mr. Sanjay. One quick question from anyone? Thank you very much. That was a very nice information, highly informative, in fact. Now, moving very fast digitally in India, and we have a lot of cyber threat. We do not have any data privacy policy by the government. Credit card numbers are out in the net. So is there any measure that could give some confidence to at least the common citizen in getting into this?
So our view is that from two perspectives. One is, I think security is an opportunity for entrepreneurs to build better products on security. It's a wake-up call to other folks who are building digital systems to make sure the systems are more secure. And at this point, for instance, after the Supreme Court judgment, actually before that itself, the government had created the Justice Sri Krishna Committee on Data Protection to bring in an appropriate law to protect people's data. And while the Supreme Court judgment was really individual versus the state, we think as much as it is individual and private entities who hold this data, whether it is aggregators or people with whom we have business relationships, and there could be international companies, right? It could be social media, it could be other kinds of data as well. So we believe that it's important we get a law which covers all of what you're saying, and the Justice Sri Krishna Committee has actually been sort of given that mandate to devise the right law in this regard. There was actually a previous committee set up in 2012, rather 2012 is when the report came out, which was done by Justice Shah, which had also covered many of the grounds around privacy that come up with the right principles on privacy. And I think between what they did then and the current situation, we will come to that law very soon. But from an entrepreneurial perspective, I think we have to be very clear that it is an opportunity for entrepreneurs in India to build security products, to build security services, so that all of us can be much safer. And
thank you.
Thank you.